What is up, guys? Welcome back to Economics with Reese. Make sure you smash that like button and hit subscribe for more videos over economics. For today's video, we will be going over the wonders of stocks. More specifically, we'll be diving into technical analysis with a little help from stock expert Kyle Gable. Before we let Kyle start us off on the path to learning the basics of technical analysis, let's do a quick run through on what exactly a stock is. Stocks are a part ownership of a company. A company has to be public for its stocks to be traded openly on a market like the New York Stock Exchange. Some companies have really expensive stocks and some have really cheap stocks. Some companies have high volume, which is the amount of stocks available for purchase, or that are traded in a day. A combination of the two tells you how valuable the stock may be. Just because a stock is expensive doesn't mean it is necessarily a better company. Each stock has a name that is called a ticker. These are usually 1, 2, 3, or even 4 letters that resemble the company's name sometimes. This is the symbol it uses when traded. You can trade stocks through a brokerage like Robinhood. The objective of trading stocks is to make money, buy low and sell high.
That's really good. Thank you.
Now that we know what a stock is, let's get into technical analysis. Technical analysis is basically when you read a stock's chart and use that information to try and predict what is going to happen next. Technical analysis is not always an exact science. It tends to follow patterns and you guess what something's going to do based off of those patterns. There are a million other factors that indicate and affect what a stock's going to do other than just what its chart has been doing the past 3 months. It is always important to check these other factors before investing in a stock and not go solely based off of what its chart looks like. So now let's hand it off to Kyle, who's going to explain the first element of technical analysis, candlesticks.
Here we have a stock's chart over a day's period. Each of these little segments is called a candlestick. The red is a daily decrease, which is called a bearish outlook, and the green is a daily increase, which is called a bullish outlook. The lines at the top and bottom of the candlesticks are called wicks. On a daily increase, the top of it is the high and the bottom is the low. And the top of the candle is the close and the bottom is the open. But on a daily decrease, the top of the wick is high as well and the bottom is low. But at the bottom of the candle is a close and at the top is an open.
Now that we know what candlesticks are, let's look at some other elements to take into account when doing technical analysis. Another element that you can add while doing technical analysis are moving averages. Two common ones are the SMA 20 and SMA 200. Here's the SMA 20. It shows what the stock's been doing the past 20 days, basically. And then if you zoom out, you can see the SMA 200, which is what it's been doing over a longer period, basically the average over the past 200 days.
Oftentimes when a stock has been performing badly or going down over the past couple weeks, it can bounce off of its SMA 200, and that is a really strong support line sometimes that people draw for things to bounce off of. If the stock has been moving at around that price over the past 200 days, people will see that and be really inclined to buy back in on that stock, seeing as that is a really strong point for it over the past 200 days. Our next element of technical analysis that we're going to discuss is going to be trend lines. So here I'm going to be drawing a trend line, and this is actually called a support line because it is going to be the support that the stock is kind of bouncing off of right here. You'll see I'm going to draw at the bottom of a lot of these valleys where the stock tends to touch down and then bounce right back off of it. You want to draw these along the wicks as close as you possibly can to get the most accurate representation of it. Now, along with support lines, there are also resistance lines. Now, this isn't the best chart to show a resistance line because it actually broke through the resistance at one point. But resistance lines are the same thing as support, but just at the top. This is where a stock kind of reaches up and then falls back after it peaks at a certain price.
So those are the basics of stock investing with technical analysis. Remember to always exercise caution when investing because while some stocks do go up and can make you a ton of money, there are also plenty of opportunities for money to be lost.